We end the week with Gary Wagner and chart this. Gary, thanks for joining me today.
My pleasure to be here.
So Gary, we saw gold dip below the $1,200 mark again this week. What are the charts telling you? What do you see there?
Well, obviously we are seeing gold trade within a very, very tight consolidated range. And in terms of the 1221, if you recall from that the chart this episode where I brought that up, I said that even in a bearish market, we should see a bounce, and it wouldn't surprise me to see the market go to 1221. 1221 is currently where we have major resistance. And that's why I coupled that statement with the fact that I have to see a close above that to really get bullish. What we ended up seeing was the market going to 1218 on one occasion, coming down, then hitting 1221 and coming right down off of it. Truly, that is the highest level of resistance. However, since we broke through 1200, I believe 1200 is now the new level of resistance.
What levels are you looking for now?
Well, the key levels in terms of support are Fibonacci based, and in essence, 1182 and 1192 were my numbers. Those are the 23 and 38% retracement levels of the rally from 1140 that took us back up to those highs. And so that now that we've breached that 1192 and are trading effectively in that area, 82 is the number to watch, 1182. If it breaks 1182, we could see the market actually trend lower and actually make a stab at the record lows. And when I say record lows, I'm talking about the lows that we've seen since the market hit 1920.
All right, Gary, let's talk inserts. The last few inserts you brought were gold and US dollar focused. What do you have for us this week?
Well, we'll be looking at the dollar on a cursory level, but what has really kind of elevated itself to the forefront in terms of investment dollars is the equities markets. On Thursday, we had the S&Ps go to an all-time historical high. Dow Jones Industrial go to an all-time historical high, or close to, and the NASDAQ went to, I believe it was a 15-year high, and then breached that for an all-time high. So you have the equities markets once again running pretty solidly. And so whenever you have that kind of momentum building in the equities, it's taking from other investment pools, one of them being gold.
Sounds good. Let's get to them.
All right. This has been an interesting week, to say the least. When we take a look at gold over the last trading week, even if we take it back over the last 3 weeks, say from the beginning of April, what has been the defining feature in this market is a very narrow and defined trading range and very little movement in terms of breaking above recent highs or below recent lows. Now, when we consider that in light of what's going on, for example, in the equities markets, this has been recorded on Thursday after the markets have closed. NASDAQ closes at a record high, and you can certainly see that on this chart, this being a daily chart of the NASDAQ former top right in this area. And we're now closing well above 5,000 at 50.56 on the NASDAQ. S&P index, the S&P 500, also flirting with a record high. Actually, on an intraday basis, let me bring this chart in, but on an intraday basis, we actually took out the former high being roughly at 2119, and we can see that high right here, and you can see that we flirted with that high once again, just closing off of this high on the day. So the real and clear question remains, why are we spending so much time on a gold report looking at the equities markets? Well, there's a couple of reasons. One, all of the markets are to some degree interrelated, but more importantly, it's all about what I call liquidity, or a finite amount of capital being in the markets, and all investment advisors, traders, individual traders are simply looking to put their dollars where they think that they have the best possible return. If the equities markets continue to move higher and break through these highs, that of course is going to channel a lot of investment money that was allocated in other places back into the equities markets. So we want to watch this closely because I think that there's a real chance that we might in fact see lower gold and silver pricing ahead and higher equity prices ahead. And that brings us to the dollar. The dollar, of course, after hitting this top at around 101, this being a daily chart, has come under pressure. It has found support just below 97, traded a little bit lower today. But when you look at the activity that we've seen in gold, although we have fairly clear directions in the dollar's corrected, but the direction has been up. S&P, Standard & Poor's, they have corrected, but the direction has been up, although we have been consolidating lately. Then we take a look at the gold market, and what we see is really a market that has been trading fairly flat. And if you look at the beginning of April here, the market has not been able to make a higher high to any great degree. You've had 1218 here and 1221 or 22 here, or a lower low during this entire month. In fact, the predominant characteristic of this month is the fact that we've seen this very, very defined and tight trading range, top of the market being above 1210, bottom of the market being above 1182. And that is why during the interview portion of the show, we talked about the fact that the key number right now to watch is 1182. If you recall from our show a couple of weeks ago, and this is prior to the market hitting these tops in here, I talked about the fact that even in a bearish market, you get bounces. And I thought that we were seeing this rally here being a counter trend to the overall trend in the precious metals markets, which is absolutely down. Traders, my sense right now is if this market does not hold this critical area on a technical basis of 1182, it really has nowhere else to go but lower. My first target would be roughly just at around 1170. That's based upon these lows. But then you have the historical low in the market since hitting the 1920 high of 1130, and then this most recent low at 1142. So these are the various levels that we could see gold actually go and test should it continue under pressure. And traders, my sense is that that contains the highest probability in terms of where I would look for this market to go. For those of you who are interested in this topic and would like more information, I invite you to go to our website, thegoldforecast.com, and seriously consider signing up for our 7-day free trial. It's a daily newsletter, video newsletter, along with our daily reports that you can read either on our site or on Kitco, or subscribe to our free newsletter, which will allow you the ability to get our daily newsletter at no charge sent out to you. And of course, you can always upgrade to the premium membership with a 7-day trial. Again, my short-term forecast in gold is bearish, but with some serious caveats. And the caveat on that is in order to believe that we're going to see substantially lower pricing, we have to break below 82. And my belief is to see higher pricing. I will not be convinced we're in any kind of a bull market unless we break above these tops roughly at 1221.
Thanks, Gary.
Well, it's always a pleasure to be here, and I want to wish all of our Chart This viewers a great weekend, and more importantly, successful investing and trading next week. Talk to you real soon. Bye-bye.
And thank you for watching this edition of Chart This with Gary Wagner. As always, comments and questions are welcome at newsfeedback@kitco.com. Have a great weekend.